It is easy to criticize the American administration and point to reasons why the empire is in decline. But my guest today will tell you a story about what everybody is missing and the covert ace up America's sleeve. His name is Brent Johnson. He is a money manager and an author of a phenomenal Substack. Just look up Santiago Capital on Substack. This is the Jay Martin Show, where we dissect the greatest minds in geopolitics and finance. Here is Brent Johnson. Enjoy.
This is Jay Martin.
Here I am with Brent Johnson. Brent, great to have you back on the program. Good to see you.
Yeah, good to see you too. Thanks for having me.
So there's this, there's a history of this event, Brent, and you've been writing about this a lot, where countries will make some decisions that effectively sacrifice their economy in order to protect some kind of national interest. And maybe that would be protecting borders to control immigration. Maybe it would be protecting domestic industries from competition abroad, building military despite, very ambiguous ROI and what that might be. And you've been covering this trend emerging right now, like protectionist nationalist policies that trump economic interests, if I were to summarize. Could you elaborate on that for me a little bit? And then I'm going to pull on some threads and we'll go from there.
Sure. Well, I think a lot of people see this. I don't think it's unique that I see it. But it's an area I've been interested in for a long time because I thought this is where we would end up. Now, it took a lot longer for us to end up here than I initially thought, but here we are. And kind of the fun thing for me is this is really what I studied in graduate school, and I focused on the structure of how the world was organized post World War II, and kind of the mechanisms and the mechanics of how the powers that be set the world up post World War II. And we've seen along the way that pieces of that start to come down, most notably, the gold standard in 1972, and then various other forms of, disagreements between nations. But it's really kind of hitting the road now with Trump coming back in to being president. And the point that I've tried to make is that I feel like for the last 40, 50 years, certainly for the last 25 that I've been in this business, for the most part, Western analysts, portfolio managers, investors, unless they were investing abroad in some emerging market, they had the luxury of just looking at the numbers to see if the numbers made sense. And that's really all you had to analyze. Because the world largely got along. It was largely peaceful. Now, obviously, it wasn't always peaceful, but largely there was cooperation. And it was a world that was tending towards being more globalized rather than less globalized, one supply chain, for everybody. But that has all been kind of thrown out the window. And it kind of first got thrown out the window during COVID, or that's kind of what highlighted the potential need to throw that out the window. And then with the combination of slowing growth, despite record high asset prices, and exploding debts, and stagnant wages, made the status quo very tenuous politically, and that allowed for the rise of Trump, for lack of a better way of saying it. And I think it's a combination of all those factors that led to Trump getting elected. And he came in on a very populist platform. We're going to return fairness to the Main Street over Wall Street. We're going to start making things again. We're going to put America first in any negotiation that we have and any treaty that we sign. It's no longer going to be for the greater good. It's going to be for the greater of the United States. And if it happens to be great for the rest of the world, that's great, but that's not the primary objective. And, that's where we find ourselves now. And I think there's a lot of people who, I don't know if I'd say incorrectly, but perhaps naively think Trump is going to do a reverse pivot on all of his rhetoric and all of his, proclamations. And in my opinion, that's to kind of misread the entire situation. Trump is not the cause. He's the symptom, in my opinion. Now, a lot of people are attributing a lot of the volatility that we're having so far this year to Trump. And he's certainly not innocent with regard to the volatility that we've had this year. But in many ways, I think the die on this whole game was cast years ago. And now they're rolling, and it just, like I said, Trump's the symptom, and he's in there, and he is doing what he thinks is right, not necessarily from a pure economic perspective, but from a national security perspective, from a national interest perspective, from helping, domestic citizens over, foreign people who receive aid. And it's a complete reset for how the world has been run for the last 40, 50, 60 years.
Yeah. And as you mentioned that, I found myself thinking like that was a global shift that occurred. Trump came to power in 2016, and you could say that, is a pivotal moment in like nationalist policies and practices. But Brexit was also 2016. That was their version, choosing sovereignty and control over their borders at the cost of economic gain as part of the union. President Xi's Made in China policy and strategy was launched in 2015, a year prior. Like you were seeing these sort of coordinated movements all at that time. And yeah, COVID like catalyzed a lot of that because maybe it like magnified the difference of global cooperation versus global reliance, which is different, right? Like we can work together and become stronger, or I can't work without you, right? Which is maybe what occurred during those years. So, we're on this path now. What are the barriers? Because when I look at America today, like, how I look at some of these policies and, the incentive is to reshore American industries. I wonder how much of it's feasible. And for example, right now there's 4 American automakers that are considering shipping their American-made engines to China so that China can then install the rare earth metals required and then ship them back because they can no longer export rare earth metals. So try to find these workarounds.
Yeah.
And I just wonder, it sounds great to say, let's reshore industries, let's bring jobs back home, let's protect the American economy. Yeah. But the logistics are actually incredibly complex. And I wonder how feasible they are in the long term. If you want to be the world's most developed nation. What do you think, Brent?
So I think we have to separate, is it feasible and is it feasible without volatility? Because is it feasible? Sure. Can it be done? It absolutely can be done. But it's just a matter of how much pain does it cause to do it, right?
Yeah.
I think if you were to just zoom out and look at the world as individual countries, and you were to have to choose one country to go set up shop in and do everything domestically and use all the resources that are found in that country, I think the United States would be right at the top of the list of places people would want to go do that. The problem is we're not, landing in greenfield territory. We're landing in places that already have a bunch of problems. And we not only have to figure out what we want to do domestically, we have to fix a lot of the domestic problems that exist already. So I absolutely think it can be done. But I actually think it will end up working, quote unquote, better than many people, at least from my perception, think that it will. But I think it will be a very rough go to get there. And I am of the opinion that even though it will be rough, that is where we are headed. So in other words, I don't think that this is all going to change and it's going to get pivoted just because of the volatility that has already showed up and the volatility that will come. And the other point I would make is, while many people think this is a kind of the pie in the sky idea and there's no way the U.S. can pull this off and it's going to be really bad for the U.S. First of all, I would say that it may not be great, but I don't think it will be as bad as many people say. But if it is incredibly bad and it's really hard to do, this will not be a picnic for the rest of the world. This will also be really bad for the rest of the world. In other words, most of the analysis and the people I talk to and the presentations I listen to on this topic go on and on about the feasibility or the unfeasibility of this from the United States perspective and how this will cause higher inflation. The jobs won't actually come back to the extent we will. It'll cause social unrest, on and on and on. I don't see much interaction or an analysis on what it will do to Europe, what it will do to China, what it means for Japan or South America. And I think it means dramatic problems for those areas, because those areas, if you analyze those domestic economies to the same level and the same scrutiny that you put on the United States, you very quickly find out that they have enormous domestic problems of their own. They have enormous amounts of debt of their own. They have enormous social problems of their own. And everything, a lot of these social problems can kind of be, swept under the rug as long as the economy stays strong. As long as people are making money, cures a lot of problems, right? Hmm. But the minute the economy turns down or revenues start to fall or people lose their jobs, all of these little problems become very big problems and they become harder to control. And so I guess the point I would make is when people say the U.S. will never be able to manufacture all this stuff themselves, they're still going to have to import it all. And these tariffs are just going to cause prices to go higher. Perhaps that is true. But if ships stop sailing to the United States and we end up having empty shelves and low inventories and it's harder to get things, well, the flip side of that very same coin is that there's excess inventory sitting on the docks in China. And there's excess production sitting on the manufacturing floor in Europe and South America, et cetera, et cetera. And if that inventory is not getting shipped to the United States, then the dollars are not getting shipped in return. And so their revenue is dropping dramatically. And the problem with the revenue dropping dramatically, because I know some people will say, well, they can just sell it domestically or they can sell it to a new buyer. That may be true, but they will not be able to sell it for the same price that it was originally intended when it was, targeted to the United States. And all of this production, all of this manufacturing that takes place overseas, it doesn't just happen out of the blue. It takes a lot of money to make this stuff. So there's a cost of manufacturing. And a lot of that cost of manufacturing, both in Europe and China, has been financed via debt. Large amounts of debt, huge amounts of debt, in fact. China has borrowed more in 20 years than the United States borrowed in 200 in their banking system. And that's largely to finance this production and their domestic economy. So if all of a sudden the revenue stops coming into the same level and they have to sell it domestically at half the price it was intended for the United States, that's fine. But the levels of debt were taken out based on getting the revenue based on the prices they could sell to the United States. And so the point is this very quickly becomes a problem for everybody. And I think a lot of times when we look at what's happened so far this year, we talk about how the United States had this huge sell-off in March and April, and the bond yields have risen and the cost of running the government is higher than ever. That same thing exists in China. That same thing exists in Japan. The same thing exists kind of all over the world. And so it hasn't been a uniquely bad situation for the United States this year. It's been kind of a bad for the world type thing.
Yeah.
And when you consider global hegemony or global dominance or geopolitical maneuverings, however you want to define that term, it's a relative game, right? And I think Trump's point is, listen, this is not going to be easy. I don't think he thinks it's going to be easy. I don't think Bessent thinks it's going to be easy. I don't think Hegseth, that Secretary of Defense, thinks remaining on top is going to be easy. But I think they view it as being necessary. And as long as they can stay one step ahead of the competition, then that's what they're going to do. And so I try to take out whether or not I would do this and whether or not I think this is right or wrong.
Yeah.
Because it doesn't really matter what I think. What matters is what they're going to do.
The smartest investors know that real wins come from thinking independently and spotting opportunities long before the crowd. And that's what we teach at the Commodity University.
I've got like 3 questions that spin out of that. And the first is that, okay, so let's say volatility does not discourage a pivot. I agree with you there. But does the political will still lack? Meaning that the United States still has to think in 2 and 4 year cycles. And we don't even know who's going to lead the country in 3.5 years, right? Yeah. And if history is precedence, and it is, then more than likely the next leader will be ideologically opposite from the current one. That's how America tends to vote, right? We go left, right, Bush, Clinton, that's how we do it. So is that a bigger obstacle and one that eventually will come to a head unless we get some third term scenario? We can talk about that. Yeah. And maybe in tandem with that, you go back to unsold inventory, underutilized manufacturing capacity in China because America's not buying. That's also a scenario they faced in 2008, right? They woke up and America and Europe were in economic rehab and weren't buying in the quantities they were, and they were sitting on that inventory. And that was the inspiration for the Belt and Road Initiative, which, I don't know if we know if that worked or not, right? It was $1 trillion in 150 countries up until about 2018. Then they slowed down, but their thought process there was onboard allies in the event of a US-China conflict, but also build the next generation of consumers, the next customer bases, so that we're not so reliant on the US and Europe. So, two questions there, Brent. Thanks for sticking with me. Number one, is political will the bigger obstacle? And number two, does China have a hedge today in that no more American buyers scenario that they didn't have in 2008? And how valid do you think that is?
Yeah, so it's a good point on the, does the U.S. have enough time because they're subject to political turnover, perhaps more than China. So I think it's a valid point and it's something to consider. I would say in my opinion, it's not as big a problem, if that's the right way to define it, as maybe some others, because I kind of feel like this was headed this way anyway. I think we would be having these issues even if Trump wasn't president. And it's largely because if you look at what Trump did in his first term, Biden continued most of those. Now, he did it perhaps in a nicer, softer manner, but he didn't reverse pivot, especially with regard to China.
Right.
And, I think the mood in the country is such that even if the Democrats come back to power, I don't think they're going to be able to completely shift back to the way perhaps they wanted to do it 10 or 15 years ago. In other words, I kind of feel like because of national security concerns and because I don't think the rest of the world's going to, necessarily reverse pivot either, that the U.S. will have to respond. And I think we're largely kind of going down this track. Now, to the second question, I'm really glad you brought this up because it helps me highlight something, and that is, a lot of people will lay this at the feet of Trump, that this is a big problem, that he's trying to change everything. And I agree. He is trying to change everything, but he's trying to change everything from a U.S. perspective. But he's doing it in an environment in which the rest of the world was already doing it. So what I mean by that is the United States has, for years, decades, been subject to tariffs. It's just that they were put on by the other side. And when they were negotiated and decided by the other side. Trump has largely said, and listen, you can't take everything he says at face value, obviously, but you also don't have to dismiss everything he says at face value either. And he has largely said, we're just going to do what everybody else has already been doing. And a lot of people will say these tariffs and these policies are going to hurt the United States, and they won't hurt the rest of the world that bad. Well, the rest of the world wouldn't be upset about the tariffs if they weren't going to hurt them, right? If this was going to be the downfall of the United States while the rest of the world ascended versus them, the rest of the world would say, put them on, do it. They would have no issue with it. The bridge and road, the China 2025, these are big nationalistic policies and goals that the rest of the world has, in this case, we're talking about China, but the point is it's not just the United States doing this. And this is kind of why I say, even if the Democrats were in power and Trump wasn't, or if some other kind of less hawkish Republican was in power, I think we're still going to have the same issues because it's not just the U.S. that's pulling back, is my point. The rest of the world, China is pulling back as well. I mean, it's kind of a mutual decoupling type of an event. It's not really a contest. It's kind of a contested divorce, but nobody wants to really stay married. Right?
Yeah.
And so, the final thing I would say is, while the Chinese political system perhaps allows the CCP more duration to get their policies across, it doesn't necessarily provide more duration for Xi himself. China has domestic problems, big domestic problems. They have huge real estate bubble that has collapsed. They have falling GDP. They have falling income. They have a demographic collapse that I don't know if people quite realize how bad it is. And so, and now that people are losing jobs, or factories were shutting down and jobs were being lost as a result of the tariffs, and people were protesting. Now, perhaps it doesn't show up on the news here quite as much as it would if this was happening in New York City, but it was happening. And so, and both in both Russia and China, there are factions that believe that both Trump and Xi have not been forceful enough with regards to the United States. And so those leaders, while they are certainly part of a system that allows their party or their administration to stay in power perhaps longer than the United States, it doesn't mean that they themselves have the luxury of time. Right. And I think perhaps people overlook that aspect as well.
Yeah. Yeah, I appreciate that. And also your comments on Biden kind of carrying the torch. I mean, it was Biden, was it not, who put the 100% tariffs on Chinese autos? That wasn't Trump. That was a Biden era decision. And a few like that.
The CHIPS Act, that was Biden, right? That was,
That's right. That's
and
right.
So,
and it's worth pointing out, like I call it the curious case of vanishing Chinese economic data. I'm sure you've been seeing this, like, over the last 3 years, 2 years, more and more, what used to be public Chinese economic data has just been disappearing from the public record. Things like land sales, cremation numbers, production numbers down to the annual production of soy sauce, no longer available. Inventory, housing inventory, vacancies, all this stuff is just like, and, I was like,
right.
I joke with, I'm an entrepreneur. There's been years where I share my internal financials with the team and years where I absolutely don't. It's not the good years that I'm holding those cards close to my chest, right? So, it's really interesting. So what do you think?
And if that was and this is not to say that doesn't happen in the U.S. Of course it does.
Sure.
But when it happens in the U.S., from my perspective, it's always hailed as this is another nail in the coffin of the United States, as another example of a failing empire. And I feel like many people just assume that the U.S. empire is going to fail and it's just a matter of time, and it's probably going to be sooner rather than later. And so every little instance like this that happens to the U.S., they hold that up as C. But then when it happens to China, they just kind of say, well, it's fine because, Xi's got, a different form of government and he can force these through. He doesn't have to. Right. He doesn't have to be as public. And I feel like it's a little bit of a hypocritical, I guess, is probably the best way to say it. To the extent the United States is held accountable or pointed out its flaws versus elsewhere. Yeah,
I mean that makes sense, and that's like standard across. Very few people are cheering on Elon Musk at this point. If they believe in him, they're kind of just like, he's doing what he's doing. But the critics are everywhere, right? Very loud, criticize. Exactly. And it's the tall poppy syndrome, right? And I think you're always going to get that with. So that makes sense. So we continue to move down the path of reduced globalization, deglobalization, whatever you want to call it. Well, you had a punchline in a recent letter you wrote, Brent, and I'm going to try to recall it, but it was like, people who are trying to figure out where this road goes. You're thinking about it wrong. What you need to consider is who's going to get run off the road first. And I just felt like that was a very powerful statement. So could you expand on that for me? And then I know I got some threads to pull on.
Well, I think the point I was trying to make there is, if you analyze the United States, and a lot of people have, but if you analyze the United States in isolation, the only possible conclusion you can come to is that this is a disaster waiting to happen and that's going to end very, very badly. Because, if you focus on there are a lot of problems, and I'm the first to admit them. And ironically, my whole framework is based on the consequences of a lot of the mistakes and problems that the United States has both made and has as a result. But just because the U.S. has a lot of problems doesn't mean, and just because we have done many things wrong, it doesn't bestow sainthood and genius on the rest of the world. And I think people will often, look at our leadership and just say, what a bunch of idiots. And I would tend to agree with them. But then they will say, this leader over there he's a master chess player, or he's a genius, or he's doing everything right. And it's, I think politicians all over the world have made enormous mistakes. And I think they continue to do so. And I don't think ours are necessarily and uniquely bad. Right. And so because it's a relative game and because capital will flow somewhere, you can't analyze a company or a country in isolation and as a result understand where it's headed, because it is a big world and it is a relative game. So even though the United States has all these problems, and even though it's probably going to get hurt, perhaps even bleed a little bit, doesn't mean it's going to lose. The analogy I've used oftentimes is, I'm a kid of the 80s, and I love 80s music and movies and sports. And when I was a kid, there was this great boxing match between Hitman Hearns and Hagler. And so Hagler versus Hearns was it's one of the best boxing matches in history. If you've never seen it, go on YouTube, look it up. And in the first round, Hagler got hit really hard by Hearns, and blood was all over his face, and they almost had to stop the fight because the cut was so bad. But somehow at the end of the round, his camp got the bleeding to stop, and the fight went 2 more rounds. And in the third round, Hagler knocked Hearns out. And so the point is the United States, we've already seen it has problems. We've already seen that it can get hurt. This year's a perfect example. But I think the United States also kind of has this unique ability, or certainly has the ability, whether it's unique or not, I guess that's up for discussion. But based on all the resources the United States has, it still has the ability to throw knockout blows. And I think that's often misunderstood. And so, but going back to your initial question, it's not so important to end up understand where we're headed as who gets lost along the way, right? The idea, I think, that the United States is just going to be on a perpetual downslope and the rest of the world is going to be fine, and it's just a matter of time before they usurp the United States. I just think it's fundamentally wrong. And I think it's to miss the bigger picture. It's to focus on the little details and therefore miss the overall situation. And a lot of times when we write our research and we're pointing these things out, what we're trying to do is we're trying to point out inherent biases and inherent blind spots. And we try very hard to not be hypocritical about it. We probably have blind spots as well, and we probably miss things as well. But one thing we don't do is we as an example, I think many people know that I'm of the belief that over the next, whatever it is, 5 years or whatever, the United States will outperform the rest of the world. But it's not to say that we don't have problems. And we wrote a very long 2-part report earlier this year about the problems that the United States has, specifically, with the budget and the debt and how that can really impact things. And then we a couple of weeks later, we wrote a follow-up to it. So we've spent a lot of time this year focused on what can go wrong in the United States. It's just that we think that I know I'm kind of rambling on, but it's probably important for me to explain kind of how we see things, and that because it's a relative game and because capital will go somewhere, if we think that there's like 4 potential scenarios. One is perhaps all of this angst about global growth and global debt, perhaps it's all for nothing. Perhaps it'll be fine. And perhaps the whole world will grow together and we won't have a crisis. In which case, if the whole world grows together and perhaps the rest of the world grows a little bit more than the United States, I'm still happy to be invested in the United States, because if we can make 8 to 10% invested in the US and South America makes 12 or 13%, well, I don't mind, giving away that little bit of alpha for peace of mind. Yeah. So that's one thing that could happen. The second thing that could happen is the whole world could go down together. Perhaps we do have this big crisis. Perhaps it affects everybody and we all trend down and things get bad. In which case, I'm no better off being overseas than I am here. And I would actually say in a global risk scenario or some kind of a global crisis, the United States is probably one of the better places to be. The third thing that could happen is the United States could be fine, perhaps grow a little bit while the rest of the world goes into some kind of a slowdown or crisis. Now, we think that's less likely because the world has become so globalized. It's hard for there to be a huge crisis overseas without it affecting the United States, but it's possible. And then the last thing that's possible, and we think this is a very low probability, but it is possible, is that the U.S. could fall and the rest of the world could rise. Now, that last, and so in any of the first three, I'm just as well off, or I'm just as happy being in the United States as I am being elsewhere. And then the fourth situation, you wouldn't want to be in the U.S. If the U.S. falls and the rest of the world grows, that would not be great to just be focused on the United States. But we think that that is such a low probability that we are prepared for it. We do have contingency plans for it. But it's so far from being our base case that we haven't had to shift the entire portfolio as a result. And I think if that happens, I think it would have to be such a unique set of circumstances for the rest of the world to rise while the U.S. fell. That I think in those very unique circumstances, we'll be able to figure it out along the way as well as anybody else, because that has never happened before. And so we kind of feel like we're prepared for all four scenarios. But in 3 out of the 4, we'd prefer to be invested the way we are. And in the fourth one, we've kind of got some contingency plans in case we end up being wrong.
So let me ask you then, and like pick me apart here, Brent, as best you can. When I listen to you, I'm like, the U.S. still has the ability to deliver the knockout blow. And it's so easy to criticize the policies and decisions of the American administration and point to downfall. It's just like common, narratives, right? Doesn't actually mean much. I found myself thinking, okay, so, U.S. takes action against X country. Can that country reciprocate, right? Like U.S. sanctions Russia. Okay, you could say that was reckless, that pulled credibility away from the dollar, all this stuff. But the bigger question is like, be that as it may, does Russia have the ability to retaliate to the same extent? And the answer is like a clear no, right? They can't. And you could run through a variety of countries, Canada, Mexico, find the same result, right? You can criticize the action, but those countries cannot reciprocate. If I were to ask that question about China, though, it's more of a question mark in my mind. And it's a question mark specifically about, I would call it like weapons diplomacy. How is the United States kept the global order? It's by selling weapons to specific countries, around 103 countries, and, propping up governments it supports and funding opposition to governments it doesn't, and all this stuff. And they still have the most advanced military in the world by a very large margin. That advanced military weaponry is 100% dependent on rare earth processing facilities in China. Yep. And while right now, America is sourcing new rare earth deposits, rare earths actually aren't that rare. It's the processing that's the hard part. And that's like a 20-year build, multi-billion-dollar build. And do you think I'm just being too narrow? So I see that as a linchpin, because I'm like, that's been the strength, has been military supremacy, which is 100%. They cannot continue military supremacy without China's cooperation. That's how I see it. Am I wrong? Or do you think I'm just, my thought process is far too narrow on one thing and I'm missing a bigger picture? What do you think?
I don't think you're wrong. I think that's a huge issue. And I think that's probably one of the core reasons why, and I want to go further on this in a second, but it's one of the reasons why I think there has been a détente between the United States and China with regard to the trade war. You saw, when they had the meeting in Geneva, they came to an agreement and a 90-day pause. And then over the last couple of weeks, Besant has come out and specifically said they have not lived up to their agreements on rare earths. So rare earths are without question hugely important. I guess the way I would flip it around, and I would say that, dollar liquidity is pretty important. And the ability to trade with other trade partners is pretty important. And the ability to get energy is pretty important. And if you really war game this stuff out and we go to some kind of a conflict in which China withholds the rare earths and we cannot get them, that would certainly have an impact on the military. But the idea that the United States couldn't then respond to that with some things that would hurt China pretty bad, again, I think are wrong. And so, if the United States cuts off China's ability to get dollar funding, China no longer has the ability to service the U.S. dollar debt that they have. And they do have U.S. dollar debt. They have over $1 trillion worth of U.S. dollar debt. And they have another $1 trillion of foreign currency debt. And nobody wants the yuan. So then how do they get that, right? And they'll say, well, then they just trade with Europe. And then, then the U.S. says to Europe, you better not trade with China, because if you do, then you're not getting access to dollar swap lines. And they have a lot of dollar debt. So that's just one example. But the point is in wars or in conflicts, really, really bad things happen. And I think what I would argue is the scenario you're laying out is a legitimate and a real one. And that would be an instance where perhaps the United States gets a bloody nose. And I certainly do not think a war with China would be something that is easy to win. I don't think anybody wins wars, right? It's just, can you survive? Mm-hmm. And I guess that's the point I really want to get across, is that I think the U.S. is probably going to get hurt in this whole thing. I think that they are. I don't think it's possible not to get hurt. But I don't think it's possible for the rest of the world not to get hurt either. And perhaps people, as a result of the fact that everybody gets hurt, perhaps cooler heads will prevail and we won't have this big conflict, right? But God forbid it does happen. I have a hard time seeing how the rest of the world fares better than the United States. So I don't think the U.S. fares well. I just have a hard time seeing how someone else fares better.
Yeah. Okay. Question on China's debt. We talk about U.S. debt all the time, right? Very rarely do you hear the equivalent conversation in China. You mentioned a couple parties, but who owns China's debt? Who is that? Who is China's debt owed to?
So this is actually a really good question. It's really important to understand this, because a lot of times people will point, especially this year, people will point to the fact that China's 10-year treasury is like 1.5%, whereas the U.S. is 4%. And they'll point to the fact that China can sell debt for a lot cheaper than the United States. Well, first of all, no, they can't, not internationally. The reason that China's 10-year treasury is yielding so little is that like 97% of the outstanding Chinese debt is owned by Chinese individuals and institutions. So it's less than 5%. It's like 3 or 4% of total Chinese debt is owned internationally or by international entities. So nobody and no one of any significant size is funding China's government. It's largely funded internally. And the reason that so many Chinese institutions are buying so much Chinese debt is because they are in massive deflationary environment in China. Their stock market is down dramatically. Their real estate market is down dramatically. Their revenue is down dramatically. The demographics are pushing prices down dramatically. The revenue has fallen. So, and nobody wants to take their hard-earned money and go buy another apartment in China. Nobody wants to buy the stock market. Nobody wants to buy, and what they are buying is gold. And the reason they're buying gold is their currency is so weak. And Chinese individuals are not buying gold because of the dollar. They're buying gold because of the yuan. And the yuan has been losing value versus the dollar. But going back to the bonds, the reason that the Chinese institutions are buying bonds, number one, is they want to want to buy something that isn't going to zero, like a lot of the assets in China are. Zeros, I mean, I'm being dramatic, but they don't want it to go down. The other thing is that in many times, especially the banks, in many cases, they're mandated to buy Chinese treasuries, just in the same way that primary dealers in the United States are mandated to buy U.S. treasuries. Banks in China are mandated to buy their treasuries, and they get a tax break. If you're a Chinese institution or individual and you buy a Chinese government bond, you get a tax break on it. So there's a lot of incentives and rules in place that are funding the Chinese treasury. And so I guess I get that's an example of where I think people are misunderstanding the signals. So a lot of the signals that come out of China, as you noted earlier, are not as prevalent and not as up to date and not as transparent as they used to be. But even the signals that do get out, I think, are often misunderstood for what they are. And then the other thing I would say, so far we've just talked about Chinese, government debt. But I mentioned this earlier. I don't think people realize how leveraged China's banking system is. China's banking system has made close to 60 trillion in US dollars. They haven't made it in US dollars, but the US dollar equivalent is about $60 trillion in there. And so those are loans that have been created in their banking system. Well, the entire United States GDP is like 28 trillion. And so, and I think the total outstanding, I think M2 in the US is like 26 or 27 trillion. So China's banking system is more than twice as leveraged as the United States is on an absolute basis. And on a debt to GDP basis, it's much more leveraged than the United States. And then I know a lot of people will say they have a lot of gold, and they do have a lot of gold, and they probably have more than they say they do. But if you measure China's M2 compared to its gold reserves, and then do that on a relative basis of the United States M2 to its gold reserves, again, China is much more leveraged even to gold than the U.S. is. So the idea that China doesn't have fiscal problems and doesn't have debt problems, and as a result doesn't have any, monetary problems, while the U.S. has all of these fiscal problems, again, it's just to misunderstand the overall big picture.
Yeah, right. So the Chinese treasury is funded 95% plus by Chinese institutions and individuals in the country. And that's who that money is. I didn't know that. And just to wrap up the banking issue, $60 trillion lent out by the Chinese banks to.
Yeah. Oh, I mean, not all at once, but over time. That's the that's the amount. That's the size of the loan. So if you think about what a bank does, a bank has deposits, and then it uses that as collateral to go make loans, right? Yeah. And when they make a loan, that's new money that's created. So if you look at the Chinese banking system and the total assets in the Chinese banking system, it's like $60 trillion. Okay. I mean, that's a lot. And this explains how China had such meteoric growth over the last 20 or 30 years.
Yeah.
It wasn't just all internally financed. I mean, it wasn't all, I'm not saying it wasn't organic. There was a lot of, economic development, but it was funded via debt, right? Yeah. And in a lot of times people will say, well, the U.S. has a huge economy, but it's all funded by debt. Well, again, yes, it is, but the same situation exists over there. And by the way, it's the same situation in Europe, and it's the same situation in South America. That this is the system that we have. This is the design of the system. For the system to function, and when I say the system, I mean the global monetary system, it has to grow. So certain countries can be a little bit better off than others, but just via the design of the system, if it lasts for a certain period of time, over that time period, it's going to get bigger and bigger and bigger. And in many ways, I kind of think we're kind of getting close to the end of this expansion. And it's when you get a credit crunch rather than expansion, that's when crazy stuff starts to happen.
Yeah, right. Okay. I appreciate that perspective. And it kind of gets me back to, I suppose, who gets knocked off the road first, right? I think maybe outlined a little bit which direction the road is heading. And who gets knocked off the road first, therefore refer to who defaults on their debt first. Is that kind of the parallel there?
Sure. Yeah.
Yeah. Okay.
Yep.
Interesting. And just because I know my audience is going to be curious, when you talked about US M2 versus gold reserves, did it strike you as odd that after all the momentum that Doge built up, as soon as they said they were going to audit Fort Knox, they got really quiet? Never pursued that one.
Well, I can't say that I'm surprised, but I was. Do you know who George Gammon is?
Of course, yeah.
Yeah, so George is a good friend of mine, and we talk all the time. And we were talking one time earlier this year when Doge was kind of all over the news, and talking about Trump, and we were talking, and we said, yeah, they're gonna institute all these budget cuts, and then they're gonna, or Doge is gonna find all this fraud, they're gonna cut this waste, and then they're gonna cut spending. And then we both kind of looked at each other and we both just started laughing, right? Because it's just, even under the most well-intentioned circumstances, it's just really, really hard to do, both politically, economically, socially. These problems are so big. And the problem is once you start, the cure for the problems cause so much pain that then you get in trouble for trying to instill the cure. So, the Trump tariffs are a perfect example of this. So let's think about what it is he's trying to do. Well, a lot of people have said he's trying to, bring manufacturing back to the United States, but as a result, he's alienating our allies, and he's punishing our enemies, and he's causing the stock prices to fall, and now he's causing a crisis. Well, okay. To me, this perfectly personifies the problem. Like, if you think it's just a crisis now that Trump is implementing policies and volatility is picking up and stock prices are falling, then you've completely misread the entire situation. The reason that Trump got elected is it's been a crisis for 10, 15 years, and it's now the genie's out of the bottle, and the populace doesn't want to deal with the status quo anymore. That's the crisis, right? The crisis is that wages have stayed flat while house prices have doubled and tripled. The crisis is that, jobs have disappeared while the rest of the world's manufacturing has outgrown the United States. That's the crisis. So now Trump comes in and he tries to reverse that, and he wants to bring better jobs, higher paying jobs back to Main Street, and that causes pain. And he gets vilified for doing it, right? But I don't know how you solve the problem of inequality and low paying jobs and loss of manufacturing jobs and loss of purchasing power for Main Street without doing what Trump's doing, right? If there's another way to do it, I'm open to it, but nobody's been able to do it for 25 years, right? And so the fact that now it's causing pain on Wall Street, I think is to miss the overall point.
Let me ask you, no one's done it in 25 years. And you're right. I don't think there's an easy way to rip that Band-Aid off. And when people say, oh, but couldn't it be done with a gentler touch? It's like, well, you explain how. And when you reflect back though, Brent, this is to a large degree just the natural cycle of empire. I think we could sort of say that with honesty, right? If you look back through the British, the Dutch, the Spanish, the Portuguese, it's like the same movie being played over again. And at some point, that's the blueprint that we're going to run forward, right? Have you in any of those empires' histories, have you seen a reversal of the trend of middle class jobs being offshored, wages decreasing, subsidies stepping in to float the middle class who's no longer employed to the extent they used to be? This causes the government to get over leveraged, all this stuff. Like that's the pattern. You ever seen that successfully reversed, or I'm slowed down, or what do you think?
Well, I think we've seen periods of time before where countries have input policies to protect the domestic economy, right? Yeah. We've had trade wars before. Now, whether they're trying to accomplish the exact same type of thing that Trump is trying to accomplish now, I think that's probably up for debate a little bit. But this, to your point, whenever a country gets in trouble, I can't think of one time in history where a government has held up its hand and said, you know what, that was us. We did that. That was our fault. Our bad. Sorry. Well, yeah. No, they always blame somebody else. And the most tried and true method is to blame that evil foreigner who did this to us, right? That strategy is as old as time. And, you know, a lot of times when if you think about it, Trump is kind of framing the issue now the same way that it's always been framed, as those evil foreigners took advantage of us. They did this to us. And now it's time to teach them a lesson and protect our own. Right. Now, I think Trump has kind of been a little bit clever about how he's done it, because he hasn't vilified the rest of the world. He's kind of taken shots at the U.S. government, but not the current administration, but the previous one, right? And he'll say, I don't really blame Z. I don't really blame Putin. I more blame our leaders for making these dumb deals. But nonetheless, I'm here now, and I'm here to fix it. But he's still blaming. He's not mad at them for having done it, but he's blaming the foreigners, right? They've been taking advantages of us for all these years. And so I think this is part and parcel of when a empire goes into decline. Now, one issue I would take with the whole fall of the empire analogy is that I think, and this kind of gets back into the who falls along the road first, right?
Right.
We may have talked about this before, because I've spoken about it many times, but there's a great book called The Storm Before the Storm that my friend Mike got me to read probably 4 years ago. And it talks about, it's about a 60-year period in Rome from like 120 BC to 60 BC.
Yeah, I've read it.
And the parallels to what was going on there, to what's been going on kind of in the United States over the last 10 or 20 years, it's uncanny. There's so many similarities. But the point of the book is that after that, was the time period of the book was the Roman Republic.
Yeah.
But what came after the fall of the Republic was not the rise of another empire in somewhere else. It was the rise of the Roman Empire. In other words, the Roman Empire came after the Roman Republic. And in the United States, we have a republic. Now, a lot of people think that the Republic fell long ago and we're already in an empire in everything but name. But I would argue that even if that's the case, you have not yet seen the empire act out in anger. Now, this is the point of the interview where I always have to say what I always have to say, is that this is not what I want to see happen. It's not necessarily what I think is the right thing to happen. It's just what I think is more likely to happen than not. And because as investing other people's capital, I kind of have to deal with the real world rather than just what I would like to see happen. Is I think that we're kind of in this Game of Thrones where, you know, the U.S. wants to stay on top and a lot of other countries want to climb the mountain. And I think because we also have domestic problems going on at the same time, it's more likely we see a rise of an empire as the republic falls than the empire falling. Because I don't think an empire falls without using absolutely every last tool at their disposal. And I know for a fact that the United States has not yet used every last tool as its disposal. I pray when I go to bed at night that I never get to see the day where the U.S. uses every tool at its disposal, because I don't think that would be pretty. But I think that would come before the U.S., resigned its position amongst the world.
That's okay. I got to reread that book now, because you're right. And, there's a trend of events that occurs, like a populist uprising that kind of points the finger at the non-citizens. Then there's a land redistribution bill that's introduced. And, the elections become increasingly more volatile. It's sort of new precedents been set. There's like a chapter, I think, called Daggers in the Forum, where it's like, this is the new normal.
It is political factions, political families, and the other point I would make is I think that there are a lot of people who think that we're in this fourth turning, and that at some point in the next 6 months or a year, there's going to be this grand event, and then we're going to be on to the next thing, and it's going to be the spring.
Right. Yeah.
And I think that's to misunderstand the situation. I think this is going to play out over a number of years. And just like in that book, there will be periods of time where one faction is winning, and there will be periods of time when the other faction is winning. And just when you think it can't possibly go on any longer, it does. And just when you think that there's no way that this party can fall, it does. But it's still Rome being Rome. even though the pendulum is swinging internally. So I guess my point is the pendulum can swing internally in the U.S., but the U.S. can still stay fairly high on the mountaintop relative to others.
Yeah.
And I think this is going to play out over a number of months and years. I don't think this is, we get into the fall, we have a big blow up, and then everything is smooth sailing after that. I think this is a process that takes a long time to play out.
Yeah. And as you read that book, you think you're reading about the collapse of the Roman Empire, but all of the emperors that you've ever heard of didn't come for another 50, 100 years after that, right?
Yeah, they came after that, right? Exactly. And Rome lasted another 400 years.
That's right.
And,
that's right.
I'm not sitting here saying the United States is going to be the global hegemon for the next 400 years. But I think the point of it is, you have to understand these things take a very, very long time to play out. And again, going back to my point is, I don't think the U.S. has done anything even close to using all of the tools at their disposal.
And another more recent point you could bolt on is that it would have been easy to look at the British Empire at the end of the 18th century and said, this thing's fallen apart real quickly, right? They just lost the American colonies and the entire economy on the new continent. That caused massive inflation. I think like 30% inflation in the year 1800. British East India Company was bankrupt, and it looked at the time like this is dead in the water, but their brightest days were ahead of them. Okay, so wrapping this in a bit of a bow here, Brent. Earlier you said capital will flow somewhere, and I wanted to pick apart that for the next 10 minutes or so here. Let's talk about assets. And you sort of outlined your 4 scenarios that you think are sort of most likely, 3 of which have higher probability than the 4th. Talk to me about asset allocation right now. Where do you see capital flowing? Defensive, offensive?
It's a very apropos question because for the last 5 years, assets without question mostly flowed into the United States, right? As the dollar, and that pushed the dollar higher relative to foreign currencies. It also flowed into gold. Most of the flows into gold over the last 5 years have flown in from foreign sources, not from U.S. sources. Because as the U.S. dollar rose versus foreign currencies, those foreign currencies were falling not just versus the dollar, but they were falling versus gold, and so that. So I think gold probably continues to get a bid. That said, it's kind of back near its high. I think gold. I don't see gold going to $4,000 this year. If World War III breaks out, then it's going a lot higher than $4,000. But I think gold has already had its big run. Now, this is not me saying to sell your gold, and I certainly don't want people to not buy gold because it might not go to $4,000 this year. But I think if you already own gold in your portfolio, which we have for, 15, 20 years now, we're not buying more gold at these prices. But we do think gold should be like the cornerstone of every portfolio. So if you don't own any gold, then you should absolutely own some gold. We continue to think the U.S. equities, if there's going to be global growth, we think U.S. equities are the best place to have it. Now, what's pretty interesting, Jay, that's happened this year, and this has kind of ignited a bit of a firestorm, and certainly I got some of it directed towards me, is when markets sold off in March and April, the dollar fell, and a lot of that was sent back to the domestic economies because a lot of foreigners own U.S. assets. Over the last 5 years, the U.S. has sucked up that capital into the United States. And the U.S. is kind of the world's piggy bank. But then we got into trouble this year, and their domestic economies also started to go down. Remember when I said it wasn't just the United States having problems in March and April, the whole world was. And as things started to down, they started selling U.S. equities, probably selling some U.S. bonds as well, and repatriating that capital. And people said, this is different. Usually when you have a crisis, people rush into the United States. They don't leave it. But that's actually to misunderstand the dynamics, because typically, in fact, almost every time in the initial stages of a crisis, capital leaves the United States. And the reason is because the United States has already sucked a lot of it up. That's the global piggy bank. And what happens when you get into trouble? You tap your piggy bank. And so global capital left the United States in April. And the interesting thing for me was that exact same thing happened in February of 2020, and the exact same thing happened in September of 2008. It's when the crisis continued and it got worse that the dollar started to rally and flows started to come back to the United States. Now, what's interesting this time is because of the pause in tariffs, capital has come flowing back into the United States. And now, asset prices are almost back up to their highs again. So it's been in kind of, so in other words, March saw a huge outflow in April, but then May has seen one of the biggest inflows in history back into the U.S. So I still think global capital that is seeking a place outside their domestic economy, I think is still going to come to the United States. Now, having said that, I think we're getting into this stage that we've been talking about the whole time where countries, not just the United States, but countries around the world are going to put policies in place that demand repatriation of capital back home, right? And they're going to put capital controls in place, and they're going to mandate the buying of, sovereign bonds. I think that's going to be part of what we see. So I don't necessarily think this is going to be easy, but let's take the example of if this happens, if we get back to where countries are putting policies in place for their domestic economies, they're demanding the repatriation of capital, they're putting up trade barriers because they need to, punish that evil foreigner. In that environment, there's not as much global liquidity flowing around the world, right? I would imagine in that environment, the dollar probably gets a bid because you still need dollars. The world still needs dollars to service all that dollar debt that they have and all the dollar invoices in the euro dollar market. But now imagine a scenario where QE comes back. But in this new scenario, as a result of capital controls and domestic policies, that QE is only made available to U.S. institutions or to U.S. corporates or even to U.S. individuals. But it's not made available to foreign banks or foreign institutions, and swap lines are not extended to the same extent. That's an environment where I think we could get into the situation where the U.S. grows and the rest of the world doesn't, based purely on dollar liquidity. Now, I know some people out there will say, well, yeah, but that's cheating. Yes, that's cheating. Get ready for it, because that's going to happen. If you think governments are going to play by the rules and play nice, I think you need to, remove that theory from your mind. Now, I don't know that that's going to happen, but my point is I don't see global capital rushing to Europe. I don't see global capital rushing to China. I don't see global capital rushing to South Africa. Perhaps some will, but I still think for global capital that's not focused domestically, I still think the United States will get the majority of it. And if we don't, and QE has to come back, and QE comes back in Europe, and QE comes back in Japan and China and here, I would want to be invested here rather than overseas in a QE scenario. So, but I think this is a period of time where we've already seen what can happen when volatility spikes and trade wars pick up. We've seen a huge rebound. For anybody who in the first week of April was saying, gosh, I really wish I would have taken a little bit of capital off the table. I wish I would have hedged my portfolio. I wish I would have kind of had some contingency plans in case volatility picked up. Well, you know what? You just got a second chance, because assets are almost back up to as high as they were. The VIX is back down to 17. And we're kind of going into we've got about a month left before, this trade pause starts to run out. And I think Q3 is going to be extremely volatile. So if you don't have any cash on the sidelines or any kind of downside protection to your portfolio, I think you should be getting that over the next couple of weeks.
I love that, Brent. Thank you. Thank you for coming on today and outlining this case. Gave me a lot to think about. And I like how you kind of pressed into my theses and makes me question how I'm thinking about things. Thanks so much for your time today. I appreciate you coming on.
Thanks for having me.
Most investors think they're playing it safe, following mainstream advice, chasing trends, and clinging to the herd mentality. But there is nothing safe about mainstream advice. The smartest investors know that real wins come from thinking independently and spotting opportunities long before the crowd. And that's what we teach at the Commodity University. This is an exclusive membership designed to arm you with the skills from the sharpest minds in the mining investment world. Each of our professionals has a proven track record of finding trends before anyone else. At the Commodity University, you'll gain access to a highly curated and growing catalog of courses covering what you actually need to know to become an informed commodity investor. Every single month, you'll receive a brand new course packed with insights from the best in the business, giving you the edge to stay ahead. If you're tired of following the crowd and ready to invest smarter, think sharper, and understand the mining industry like the professionals, then take the next step and join the Commodity University today.